and welcome. It's another trading day right here in Lagos, Nigeria. But guess what? Ladi's not anchoring the show today. We have someone who left us for a while, but she's back now. Her name is, drum roll, Grrrr, Ini Jomekwa. Welcome.
Ladi,
You have been on leave.
Ladi, I
having
didn't leave
fun.
You. I've always.
Yeah.
Well, I guess it's a part of life.
Exactly.
If you want to function better, you have to take some time, and go back and observe. And I noticed that you guys have been doing some beautiful things. GDP was out yesterday.
Yeah.
Good numbers.
Good numbers.
Our reserves
Inflation
are looking
going
good.
down.
Inflation going down.
Right.
FPC today, is it a cut? Is it a hold?
Maybe a hold, at this point.
Again?
Maybe a cut.
What's happening with the Fed?
So the Fed cut rates,
so
and
we should do
definitely
the same.
Some are saying that should lead us.
Exactly.
But we have our own issues, and it depends on what our own chair says and what they see fit for the Nigerian economy, at this time. But how was your holiday?
Oh, it was very.
Where did you spend it?
I did domestic
Did you travel abroad?
Travels.
Oh,
no.
Okay.
I promised you that I would intentionally push you and myself to do domestic travels, and that's what I did.
And you kept the dollars in Nigeria. Fantastic. You have the floor, Amy.
All right, Ladi, thank you so much. Oh, good morning, everyone. Good to be back. And yes, it's time to do 55 minutes of business. I know Ladi has been doing that in my absence. Well, let's take it a notch higher this morning as we talk about oil prices. They were a little changed as traders are contemplating the impact of ongoing geopolitical tensions in the Middle East. That's still top on the news in Russia, while worries over trade tariffs that could dampen fuel demand persist. So look at the numbers for this morning. It's red, 0.63% down for Brent, $66.15 a barrel. WTI is also down almost the same percent, and it's at $61.90. And of course, the geopolitics are the ones leading the drivers of these two Gaza City hospitals have been taken out of service because of escalation of Israel's ground offensive and damage caused by continued Israeli bombing. Gaza's health minister disclosed this as tanks advanced deeper into the territory. Crude oil was relatively unchanged as the market digested the impact of the European Union's effort to restrict Russian supplies. Now, still talking about oil, but let's look down here to Nigeria, and we see some good news. I was talking to Ladi about some data that shows positive outcome of government efforts in recent time. Another area is in the area of crude theft, and that seems to be reducing in recent times. For instance, we see that for 2021, losses peaked. That's the highest we've had so far of losses that we've had in 2021. Crude oil losses peaked at 103,000 barrels per day, and that's the highest in almost 23 years. The total lost barrels for the year were around 37.6 million. And the next year, 2022, there was a reduction in losses. Yeah, we have it right here. So there was a reduction there to 57,000 barrels per day. A drastic drop occurred, with losses falling to 12,000 barrels per day, according to the Nigerian Extractive Industries Transparency Initiative. And they also reported that there were 7.7 million barrels that were stolen or lost in 2023. That shows a 79% decline from what was lost the day before. Now, in 2024, that's last year, losses averaged around 11,000 barrels per day, showing another improvement. And this year so far, our losses fall to as low as 9,000. So you see the trajectory there from about 103,000 to 57,000 to 12,000 and then 11,000. And this year, even though the year is not over, we've seen 9,600. Are we doing well in this area? Is this going to increase our revenue? As we see, even though we're trying to boost our non-oil revenue, we have Chinan Dikwa, he's the Vice Chair, African Energy Council, joining us to tell us the findings of his body. Hi, Chinan. Good morning. Welcome to the program.
Can you hear me?
Yeah, I can hear you, Chinan.
Hello? Can you hear me?
I can hear you, Chinan. Can you hear me? All right, seems we're having a bit of a challenge with hearing Chinan or Chinan hearing us. Hello, Chinan, can you hear me?
Yeah, I can hear you perfect. Can you hear me at all?
Great,
Ini?
yes. So we're just looking at the numbers, and we saw a steady reduction in the number of crude thefts in Nigeria. And I know that your organization, the African Energy Council, has been following this. Tell us some of the findings, and if you think that this is sustainable, that's reduction in crude thefts.
Absolutely, Ini, and great to see you again. So you're 100% right. At the African Energy Council, we have been doing extensive work to profile the scale of oil theft and just to see the trend like you're putting out there. And Ini, I think what you've shown is great, but I've got to say these are very conservative numbers. These are government figures. I think in 2021, some of the unofficial numbers that we had was nearer 200,000 barrels per day, actually, of crude oil that was stolen. Now, if you put that into perspective, if you think about some of the OPEC countries do not even produce up to 200,000 barrels per day. But here we are in a country, Nigeria, and we're losing, that much. So take our sister country like Ghana. Ghana's production at its peak was about 211,000 barrels per day. Today, a lot less, I think 160. But here in Nigeria, these are numbers that we're saying were stolen. So that's just a very clear example. But without a doubt, I think the good news here is since 2021, the trend has been downward, and I'll give you numerous examples. One example is the government came up with what we call Operation Delta Sanity. There was Delta Sanity 1 and Delta Sanity 2. All of this were deployed by the Navy. We recorded decent success in there. But I think by far what we've seen that brought some of the success has been the partnership with the communities, where some of those, the ownership, if you like, was passed on to the communities, and that's dropped it quite a lot. Now, in today's world, 2025, the general consensus, when you speak to a lot of the analysts, is that oil theft is less than 5% of production, which I think is very significant and very laudable.
Well, that's interesting, and you talked about the efforts of the government and the cooperation with the community. But sometimes when we talk about stolen crude, so many questions pop up that there are no ghosts. And they actually have to be experts to be able to do this. So I think some of the findings which you shared with me, the areas of this stolen crude, you can see a place like Ebeson oil field in Ondo State. There are 17 Nigerians were arrested and heading towards the Benin Republic. 12 Nigerians and 1 Ghanaian arrested. And then you have the Abo field to Lagos Anchorage. And I'm thinking in my head, it can only be technology if you want to secure these areas, which are so off land, and very intricate when it comes to securing.
Absolutely. So, when we talk about oil theft, many people look at this as a very local problem. The way people imagine it is that, these are people in the creeks, with flanges and, massive spanners, and all they're doing is rupturing pipelines and putting it into small vessels. It's not the case. These are proper industrial operations, and it's something that's transnational. It's not simply about Nigerians. If I give you examples, and you started to mention some of those, let me just profile some of them just to give context here. If I take, MV Lima, Panama, that was found off, I think, brass in Bielsa State, a large vessel, 15 Filipinos. This was caught at sea. So literally what they did was they took a small container vessel, loaded up with crude oil, moved it offshore, and they were offloading away into a large VLCC before they were caught. And there's been several examples. We've had Filipinos, we've had Sri Lankans, we've had Russians, we've had Ukrainians and Cameroonians. Several, even Ghanaians, involved in here. The point in here is this. It is a massive international operation. It's a very touchy subject. I understand that. Many people don't want to talk about this. It's a very touchy subject because it touches lots of nationalities.
And that's why, China, and sorry to interrupt you, a lot of people say, yes, you have Filipinos and Cameroonians, Africans and Ukrainians and all of that, but none of this would be possible if there was no cooperation from the inside.
That's exactly the point. So what we have done, I'm going to say this to you, you're 100% right. What we've done is we've just reported on the very obvious ones, the nationalities. Behind those nationalities is a huge network of Nigerians who are working in tandem. And part of the work that we're doing, without spilling the beans, is trying to go one level down into that, to try to understand what networks are in there and where the relationships go to. Now, you see, the reality of it is it's a huge operation, right? And it's something that has to be done with a lot of care, and we're being very sensitive around putting things out, putting things too early. But that work is ongoing right now. But let me say this, I'll say this. You see, when it comes to oil theft, people have to understand. The first step, yes, is coming in and rupturing a pipeline and then connecting that pipeline to a small barge, usually about 15, sort of 15 metric tons, something like that, a small barge. Once the crude oil goes into that barge, the next step then is to take that crude oil and take it offshore further down. Now, most of the times, I can tell you this, what we're finding, they take the barge and move it around. There's a triangle around Lome, Togo, and Benin Republic. There's a small triangle around there where a lot of the transfer, the ship-to-ship transfer takes place. So small vessel comes, a big vessel is waiting, usually a VLCC, massive container vessel. What happens then is they transfer the crude into that. The moment you transfer it in there, they sail further offshore. As they go offshore, that is where the magic then happens. That crude has come in, new papers, forged papers will come up, they'll forge the papers, they'll take that, pass it away further into, offshore, and then blend it with another crude so that the origin of it is not quite clear before it goes into international markets. In fact, I'll tell you this, stolen Nigerian crude has been found in Singapore. Stolen Nigerian crude has been found in the port of Rotterdam in the Netherlands. Stolen Nigerian crude in the US, in Venezuela. I mean, several countries have had stolen Nigerian crude. And you're 100% right. We are profiling those nationalities, but the next step is we're going further down and looking at the connections within Nigeria. And that will be the next phase of our work.
All right. So we have the good news that crude theft is reducing. I think you said about 5% of our production now. Do we see a commensurate increase in our revenue? When you compare the days of high crude thefts and now a reduced crude theft?
So that's a great question, Ine, but I'll answer it this way. Yes, there is an increase in our crude production. It will be very difficult for me to tell you that simply because of crude oil, because we're plugging those gaps from crude oil theft, but I'll tell you this without a doubt. One is that we're seeing, huge amounts of production that are coming in. A lot of it driven by the reforms that we're seeing in the oil and gas space. So lots of, an example is the cost efficiency executive order and other, sort of incentives that we're seeing. That has certainly led to us increasing production a lot more, certainly above 1.5 million barrels for crude. Okay, 1.5 million barrels of crude, the numbers just came out from OPEC. But also, there's no doubt that we're plugging the losses from crude oil theft. We have. There's no question about that. We have seen situations where in the Niger Delta, particularly in communities around Bayelsa, who literally work in partnership with government to police those pipelines and make sure that any vessel that comes in, is reported to Navy. But beyond that, they're working in tandem. And that has certainly led to us seeing crude oil production for Nigeria, and of course, translating to revenue.
All right, Chinan, thank you so much. At least we have some good news there. We had a GDP yesterday with some good numbers. So perhaps we're on the right path with President Bola Tinubu's administration. Thank you so much for your time and sharing your findings with us this morning. Chinan Dikwa, Vice Chair of African Energy Council.
Pleasure. Thank you.
All right, so now non-oil stories. Yesterday, we saw that the Nigerian Stock Exchange dropped 0.24% down, 141,498. I think in my absence, there's been a lot of drops in the market, but I'm back now. I come with some glowing numbers. Don't worry. Activity yesterday we saw was 488.56 million in volume, while deals were almost 29,000. Top gainers yesterday: Royal X, NSL Tech and Charms. Top losers: MS Nichols, Ikeja Hotel, and FTN Cocoa. Top trades, as usual, in the financial sector: Universe Insurance and Zenith Bank. And then Nigerian breweries did follow suit. And still talking about non-oil stories, we see the relationship between Nigeria and the UAE. When it comes to trade, we see that the non-oil commodities trade relations with the United Arab Emirates rose to a record $4.3 billion. That's for last year, though. This is according to the UAE Consul General in Lagos. He made this known via a statement, maintaining that the numbers could be much higher, adding that there's a need for more partnership across board, describing Africa as a unique hub for business investments. Highlights that last year that the UAE had the second highest foreign direct investment ratings on the continent. He notes that the Consulate General of the UAE in Lagos was the first in Africa, stressing that Nigeria is one of the Emirates' most strategic partners in the region. And, well, a bit of corporate now. The 2025 Cancer Champions Conference marked a significant milestone as global skincare brand Nivea, collaboration with Bricon Foundation, hosted the project's Rise Fund handover ceremony. It was held in Lagos and focused on providing vital support to families affected by cancer, celebrating a message of genuine hope, resilience, and care that goes far beyond the skin.
In a meaningful display of love, compassion, and care, global skincare brand Nivea partners with the Bricon Foundation to support cancer patients and survivors in Nigeria. The handover ceremony, themed Together We Rise, honors families impacted by cancer, spotlighting the emotional and physical need to rehabilitate, integrate, support, and empower them back into the society.
The reason why we actually decided to do this as a company is because it actually ties in with our social mission as a company, globally and also here in Nigeria. So we know that Beiersdorf is the powerhouse behind product that we all know, Nivea, and also Eucerin, which is our go-to product, a care for our skin. And we want to take the care beyond skin. So not just caring for your skin, for our skin, but care for also our community.
When we were approached by Nivea, we were quite excited because in these kind of partnerships, it's about finding the right partner. If you like, finding the right wife. For us, it's not just about paying medical bills. It has to be more than that. It's about how do you get them back into society. Cancer, as you know, is extremely financially toxic. Most people after a cancer diagnosis have nothing left. They're broke. We just thought it was really amazing because it now empowers them to come back into the community and not have to beg.
3, 2, 1, 0. 46 million.
In a heartfelt moment, the grand unveiling of the total funds raised takes center stage. Beiersdorf officials highlight the vital role retailers and consumers across the country played in driving the success of the initiative.
The way it went is that for every sale, for every bottle that we sold, we donated 300 naira to the foundation. So a shopper walks into the store, buys any Nivea range of product, including Eucerin. The proceeds we offer 300 naira to this foundation. So the 46 million that we donated today is an accumulation of 300 naira across, so you can imagine the number of bottles that we had to sell.
So I also want to thank the consumers that took part in this. Many consumers who would ordinarily buy one bottle, they bought 2, 3 because they knew it was going towards a good cause. So very simple mechanic, but look at how much we've raised today.
I mean, this year was a very great partnership, and next year we're looking forward to scaling it up and seeing how we can achieve more, and even calling on other foundations to see where we can step in and where we can support.
As Nivea and the Bricon Foundation continue to foster impactful collaborations to bridge critical healthcare gaps, events like these prove that small acts of kindness, when multiplied, can transform lives.
And now to those numbers which came out yesterday. Nigeria's economy expanded by 4.23% in the second quarter of this year, hitting a 4-year high and outperforming the 3.48 growth record in the same period of last year, 2024. Data by the National Bureau of Statistics shows a surge in oil production, which we just discussed, that drove much of the growth momentum. And this production boost translates into real GDP growth of 20.48% for the sector. However, the oil sector contributed just about 4% to total GDP. Also, GDP growth has largely been supported by the non-oil sector, with key contributions from agriculture, trade, ICT, and telecommunications. Real estate, remember, took over from last quarter. Financial institutions also contributed, construction and energy supply. Let's delve into this now with the Vice President, Economic Research at Financial Derivatives Company, Dr. Ifeoma Nwokolo. Dr. Nwokolo, good morning and welcome to the program.
Good morning, Amy. Thank you for having me.
Good to have you. I wonder if you caught up with the conversation that I had earlier with Chinan from the African Energy Council about how crude theft is reducing. And I see the impact now in the GDP, even though from last quarter we saw real estate also doing very well, services also taking over. What's your overview of the compartment or the composition of our GDP as a country at this time?
Yeah, we saw that the recent GDP Q2 2025 was a strong growth of 4.23%, way higher than what we had in the corresponding quarter. So in my analysis, I'm going to be comparing apples with apples. So we're in Q2, so we're comparing with corresponding quarter Q2 2024. And this strong growth that we saw is a 4-year high since Q2 2021.
Yeah, sorry, Dr. Nwokolo, let me just interrupt you. If you want to compare Q2 2025 to Q2 2024, aren't you talking about the rebased number? Are you using the rebased of 2024? Because that also makes a lot of difference. The rebasing.
Of course, it makes a lot of difference, but when you talk about Q2, at least activities setting in Q2. If you're comparing Q2 and Q1, of course, we know that Q1 we have less activity because of the festive period in December. So the economy is just gradually kicking in. So there are not much activities in Q1. So what we saw in Q2 2025 is basically more of reflection of the rebasing, because the rebasing was good. It was supposed to be, because we know that a lot of activities were underestimated, and these activities were included in the recent GDP rebasing. We talk about the creative industry, we talk about the renewable energy and the likes. These are fast-growing sectors that were included in the sector, and I think that's why we saw these strong GDP growth of 4.2 compared to the previous quarter, which is 3.48. This is quite high, even compared to the previous one. It was 3.13%. So looking at the GDP holistically, we saw that when compared to corresponding quarter, we saw that about 32 activities expanded, 10 slowed, and 4 contracted. And those activities that slowed included the health, human health and social services, included food and beverages, included forestry, included real estate, and the likes. Then the ones that contracted were the textile, motor vehicle, metal, oil, but every other activity expanded. What does that tell us? It told us that the economy expanded basically from the angle of the non-oil sector. Non-oil sector expanded by close to approximately 96%, while the oil sector expanded by just 4%. And dissecting this data, we saw that the industry was the major driver of the Q2 GDP results, and it grew by 7.45% compared to 3% the previous corresponding quarter. And this is basically from, you look at the oil and refinery, increased by more than 15%. We look at energy and gas supply also increased. That's where we talk about renewable energy coming into play when it comes to the GDP numbers. That one, it grew by 11.47%, and we have construction also grew by 5%. So when it comes to service is another sector that drove growth. Services grew by 3.94%. And when you talk about services, you have the likes of telecoms, arts and entertainment, financial institutions, insurance. All of these activities grew compared to the corresponding or even the previous quarter. Agriculture is another sector that also grew and contributed to GDP massively. It grew by 2.82%. And that growth was basically from fishing and the crop farming. I think these are the two aspects of agricultural sector that really boosted GDP growth. And that simply implies that economic activity actually increased in the GDP. Look at the PMI, average PMI for Q2 also increased to 52.3%. Yes, this is 52.3 compared to the threshold of 50. So it's a plus. So that simply means that private investments grew in Q2, meaning that investors' confidence was high, because for economic activity to expand, it simply means that investors' confidence grew in that quarter. And what drove that confidence was basically the exchange rate that had been stable for quite some time. So people could at least plan for their investment. You are not just at the edge. You don't know whether the interest rate is going to drift from what it is, but it has remained stable for quite some time. And also the inflation has continued to decelerate for 5 consecutive months. I think these are the reasons why we are seeing this expansion, and we are seeing FPI inflow as well. So all of these factors are the major reasons why we saw this expansion in the GDP.
Dr. Mukul, I really appreciate the fact that, when you mention a sector, you connect it to a driver. And I really appreciate that, because I don't know if you've heard, but there are some dissenting voices following the recent numbers, the GDP numbers, especially when you look at the jump from first quarter to second quarter, and people are asking questions. Does this really reflect the true status of the economy at this time, this impressive number that we have?
Yeah, I said that the major reason, don't forget, why we have this jump in the GDP, let's not compare Q1 and Q2. In Q1, we usually see a slow in the GDP because of the festive season, December. Q4 is usually festive season, where you have spent all your money, dirty December and all the rest. Then in Q1, there is a slowdown in economic activity because people don't spend as much. This is when you pay your school fees and all the rest. But in Q2, economic activity set in properly in Q2. And don't forget that even in Q2, we saw that exchange rate was stable. This could be the reasons why we are seeing this spike. Exchange rate was stable, and inflation has decelerated for 5 consecutive months. That is a plus too. So coupled with the inclusion of fast-growing sectors, and I mentioned these fast-growing sectors earlier. I mentioned the creative industry. I mentioned logistics. Then we have and others. So all these fast-growing sectors are the reason why we saw this push. These sectors were underestimated before now. They were not included in the Q1 results. That was why we saw that Q1. If we had our rebasing in Q1, I'm sure the numbers will be high too. But looking at the reality we are seeing, we may not see it translate into we will not have immediate effects on the masses. We always have a lag when it comes to all of this. There's usually a lag. The time you see the data and what you see in reality, anecdotal data and the real data may not be reflecting same, simply because there's always a lag.
Okay, all right. I guess that is why we still have that question of, while we have impressive macroeconomic data, the micro is still not reflecting it. So I guess it's that lag. But when you look at this, 5 consecutive drop in inflation, now we have GDP at over 4%. Are we ready for a rate cut? The decision for the MPCs today.
Yeah, we are expecting a rate cut. The market is also expecting a rate cut. The Bloomberg even projected there's going to be a 50 basis point cut. But we are opting for a 25 basis point cut because we've seen there are some parameters the MPC will consider today, later today, and their inflation, which has declined consecutively for 5 months. Another parameter is the exchange rate, which has been quite stable for some time. And another parameter is the money supply growth, which was over 60% in January and is at 15% as we speak. So all of these factors put together are what the MPC will be considering. And don't forget that their major concern is price stability. Looking at growth rate is, I would say, is a secondary parameter to them. And while we say they are cutting by 25 basis points, of course, we have a strong growth rate of 4%. So a significant cut in interest rates might overheat the economy. Yes, it might overheat the economy because already with the data we have from the MBS, 4.2%, it means that economic activity has actually expanded, increased. So a further cuts, significant cuts, will further increase economic activity. And of course, you know what will happen. We go back to the beginning, inflationary pressure and the likes, we come back again. So I think 25 basis points is cool and is more or less neutral, even if it cut by 25 basis points, is neutral than having a significant cut. And let's not forget the fear of once MPC cut rate, we are going to see FPI reversal. Well, when the cut is minimal, I don't think we are going to see any reversal because compared to other countries, we see that we talk about inflation interest rate differential. Nigeria is still at advantage. We will still see FPI influx into Nigeria, even if we cut by 25 basis points.
Who the MPC will listen to more, whether it's Bloomberg or FDC, it's in a couple of hours. We'll certainly see what decision comes out of the MPC meeting. Thank you so much, Vice President, Economic Research of Financial Derivatives Company, Dr. Ifeoma Nwokolo.
Thank you for having me, Mimi.
Let's take a break now. When we come back, we'll head to the financial sector and see what's happening, how banks are bracing up. Will there be a cut? Will there be a hold? Certainly there won't be an increase in interest rate. But we'll talk about that and other issues in a minute. Please stay with us.
The Nigerian Association
welcome back. It's still Business Morning right here on Channels Television. Let's head to the financial sector. They have the conversation for today, and I'm sure for most of this week, especially as we expect or await the announcement of the decision of the MPC. The meeting concludes today, started yesterday. Let's have that conversation and other related issues with the Managing Director and Chief Executive Officer of Globals Bank, Mr. Elias Igbinakenzua. He's right here in the studio. Mr. Igbinakenzua, good morning and welcome to the program.
Thank you, Ini. Thank you for having me.
Yeah, so we're just with my last conversation looking at what do you think will happen? Will there be a cut? Will there be a hold at the end of MPC meeting today?
Very interesting. Let me first commend the CBN for what they've done to date. We've seen that over time, inflation is getting better, it's coming down, now down to 20.2. We've seen the exchange rate getting better. And so we believe that in the same direction, the interest rates, would improve.
So you're hoping for a cut?
We hope there should be some moderation in interest rates. I don't know the extent, but I think there should be some cuts.
So a lot of people talk about, you at Globals Bank, for instance, you talk about disciplined lending. A lot of manufacturers have been crying out on the high interest rates in the country. Assuming there's a cut today, by the MPC, how reflective is it in real terms when it comes to lending to especially small businesses?
So there's been a lot of concern about high interest rates, rightly so. If you look at the margins for manufacturers, it's quite thin. And if you are to pay interest rate as high as 30%, you wonder how you're going to do business and make money. But first thing first, the CBN had to ensure that there was stability before battling interest rates. And now we are getting there. We are seeing that there's stability in the economy, and interest rates may be the next focal point. But back to lending, in a high interest rate environment, lending gets a lot more, delicate. The incidence of bad loans will be higher in a high interest rate environment. So, of course, discipline is important at that point in time. As a bank, we are very mindful who we lend to. We have our criteria that you must meet before we lend to you. And we also look at your businesses to be sure that you can generate enough revenue to pay the charges. And like I always say, lending decision is collective. So we look at all parameters and say, yes, it's good to lend. But we think that with what should happen soon, there should be some reprieve, in that sector. For us to lend more to those who are doing good business.
Your mention of bad debts brings my mind back to the issue of a credit rating register. I've spoken to a couple of people who own and run credit rating companies, and they have registers, and they say the register is filling up and all of that. But how active and effective are credit rating registers to banks like you when it comes to lending?
Very important. We have three credit. We have three credit bureaus now.
Okay, credit.
We have rating agencies also, the likes of Gosso & Co, GCRO, Fitch, and all that. They point to what you're doing, whether you are following best practice. In the last few years, we've had 2 upgrades, by Augusto & Co. The last one was an A rating that we have. And within the first 5 years of operation, we're already A-rated. That shows that we have disciplined approach to lending. Again, today we still have 0 NPL. I think we're the only bank that can boast of that in our country today. And it shows that we're actually being very cautious, disciplined in lending. So I think the agencies are doing a good job.
But are you using the credit register?
Register?
There's a credit register that they use to rate. Yeah, credit bureau.
Yeah. There are 3 of such, We always use them before we do any lending. But the CBN require that you check at least 2 of those bureaus before deciding who to lend to. If any name is in that credit bureau, you're not allowed to lend to them. So you have delinquent customers that are there. You go and clean up that delinquency so you can approach the bank to lend. So we always check.
So, I mean, there was a time, I think just a couple of months ago, at the stock markets, the banks were really doing well, but it seems a bit quiet now. What's going on?
Banks are still doing well.
Quietly.
Maybe quiet, but if you look at the stock market index, you see banks still, topping the charts, and interest is very high. The APIs, came in recently, and bank shares were, the preference of those APIs. And if you look at the results being posted, they're still very good. However, it's been tight on banks when it comes to regulation. We still have the highest CRR in the globe, of 50% of your deposits. So that is a big constraint for banks to lend or to make money for shareholders. So that may also affect investors' interest. So if they have this kind of regulation and they have to quarantine this amount of deposits, how would they, make money for shareholders? So maybe that is where you see the slowdown in interest of bank shares.
And you still have your journey towards recap. That's first quarter of next year.
Interesting as an industry, yes. But we are past that stage. We finished ours. We've raised our money completely, and I wait to CBN to verify the capital very soon. So hopefully before the end of the year, we will publish our financials, that we are fully compliant.
But Globes Bank is not listed, am I mistaken?
Not yet.
We're waiting for you.
Not yet. But we'll get there.
All right, so help us to understand. Recently, the CBN mandated banks to announce appointment of successor at least 6 months. What's the background? Why do we even have to talk about, was there an issue?
No, it's a normal governance requirement. If you are leaving an organization, there should be a plan, there should be a transition. It should not be abrupt, as in the guy is not today, tomorrow he's gone. So before CBN even announced it, many banks have that plan for succession. The CBN will always come and review and ask you, where's your plan? So it's there. Maybe to make it public, so that people will know that there's a transition, from an MD to another.
Yeah, because a lot of us were wondering, what's the essence of this announcement? Why was there a fault, a default, or something like that?
We're not aware of any fault or default, but CBN maybe just to re-emphasize that this is the practice.
Okay, and it's a world of fintechs now, and people still ask the question: is it competition with the fintechs, with the traditional banks, or is it collaboration?
So for us, it's collaboration all the way. The report I gave the CBN as my study in 2018, when the bank was being licensed, one of the areas that was catching for CBN was where we emphasized collaboration with fintechs as a way of enhancing financial inclusion. So it's been for us from the beginning to collaborate. The fintechs today, have made a lot of impact. In the last 4 years, fintechs have attracted about $4 billion in capital and investments to Nigeria. Today, fintechs account for about 40% of the volume of payments, especially at the retail end. And they also account for about 25% of the value of payments. So you can't ignore them. We can coexist. They have the strength, leverage technology, and then penetrate the retail segment better than you can do as a bank. But we can work together. So we have a robust IT platform, where we enable fintechs to work with us and make more impact.
Because I wanted to understand, when you talk about these transactions and investments, there are investments that otherwise would have gone to traditional banks. So where does competition start and end? Where does collaboration? Because you still have to make profits. You're in business.
I won't say would have gone to traditional banks otherwise. There are investments that are tailored for those businesses. Those who are investing in fintechs are not the same that we invest in banks. Fintechs are basically tech-driven, okay? And there are people who are tech-savvy as investors, okay? Without mentioning names, one of the fintechs did about $1 billion, at a go. Those investors didn't invest in banks at all. They prefer the fintechs. So, and maybe they have a special reason for that. Turnaround time, we don't know. Perhaps also regulation is a factor. They are less regulated. So they are freer to do business than banks are. So there's difference in...
But this trade regulation may be coming their way, because I know, this, the CBN is also looking their way.
You can say that again.
There's been some new introduction in the last couple of months and all of that. So we might all be heading to the same place at the end of the day.
So to be honest, that's why we are organizing the FinTech Summit. We believe that, the future of banking is not in banks working alone or fintechs alone, but we need to come together and say, how do we forge a future that we all desire? So regulation is important for all of us. Okay? The regulators have got to understand how banks operate, how fintechs operate, what are the risks that must be addressed, and what safeguards must be put in there to ensure that the financial system is safe and stable.
Well, just before we let you go, and I know this might come out dangerous because, of course, you're regulated by the CBN, but there's been talks, even you have mentioned the issue of over-regulation, and there's been talks of that even before now. Where would you like to see a change in that area, the area of over-regulation of the financial sector?
So, again, it depends on the level of discipline and compliance that we see in the industry. The CBN, this administration came in down the line about 2 years ago, and they thought that there was need to be more focus on compliance and ensure that banks are more disciplined in their approach to doing business. And they therefore had to tighten regulation. And I believe as they see banks complying and banks being more disciplined, they will learn to ease that a little bit. So it's something that is not really negative. We may feel, it's squeezing, but it's for the good of the industry.
All right, thank you so much, Managing Director and Chief Executive Officer of Global's Bank, Mr. Elias Igbenaz-Kenzua, for your time and your perspective. And of course, we'll be looking out for the MPC decision today. Hopefully, we'll get that little reprieve.
Thank you.
For interest rate. Thank you for coming on the program.
Thanks for having me. Thank you.
Let's take a short break. When we come back, Ladi will be here with Global News. Please stay with us. All right. Let's head to the global markets and global news now with Ladi Williams. Ladi, I'm the one bringing you in now.
Yes, she has brought me in. Thank you so much. Let's see what's playing out now. See, Fed's Myron is pushing back against adjusting a 2% inflation goal. The Federal Reserve Governor, Stephen Myron, said yesterday that he opposed altering the central bank's 2% inflation target for now, stressing that any review should only come after the Fed has met its current goal consistently. Speaking at an economic club of New York event, Myron cautioned that changing the target prematurely could give the impression of moving the goalposts, even as he acknowledged broader long-term questions around monetary policy. It's rate-setting season now. We're all listening to the central bankers. Then we see Federal Reserve Chair Jerome Powell. He's set to deliver remarks closely watched by investors and policymakers alike, as markets are looking for signals on the future path of U.S. monetary policy. His comments could offer fresh guidance on the Fed's stance amid easing inflation pressures and ongoing debates over the timing of potential rate adjustments there. Then some company news now. NVIDIA Corporation have surged to a fresh all-time high with its stock price hitting $149.49, lifting its market capitalization to $4.48 trillion. According to Investing Pro data, the milestone reflects a remarkable 58.27% increase in the stock over the past 12 months, fueled by a 71.55% revenue growth and strong financial health. Analysts have set price targets between $100 and $270, underscoring both the company's rapid rise and the debates over its valuation as it trades at a PE ratio of 51.32, slightly above the fair value. The company's success is closely tied to its leadership in graphics processing units and its aggressive push into artificial intelligence and data centers. Investor confidence has been further bolstered by upward earnings revisions from 29 analysts, highlighting expectations of continued momentum. As NVIDIA's innovations reshape computing and AI infrastructure, the stock remains a central focus for market watchers, tracking, the tech sector's future. And shares of Chinese Apple supplier Luxshare Precision Industry surged to a record high this week after reports that the company had struck a deal with OpenAI to manufacture a new consumer artificial intelligence device. The stock jumped as much as 10% in Shenzhen today, extending gains from a similar rally on Monday and closing at 67 5-year and far outpacing the Shanghai Composite's 1% decline. The information reported that OpenAI signed the agreement with Luxshare to produce an AI-driven consumer device designed to integrate closely with its flagship models, including ChatGPT. The development follows OpenAI's earlier acquisition of IO Products, a hardware startup founded by former Apple designer Johnny Ive, signaling the company's deeper push into AI-based consumer electronics. And to Asia now, South Korean biotech firm Celltrion Inc. They've agreed to purchase Eli Lilly's biologics production facility in Branchburg, New Jersey. An acquisition valued at about 460 billion won. It's about $330 million to cushion itself against U.S. tariffs. The deal to be carried out via Celltrion's U.S. subsidiary and including additional operational costs pushes total investment closer to 700 billion won. Celltrion says the acquisition will enable it begin operations faster and building a new plant from scratch while also delivering substantial cost savings. And we see Australia's business activity expansion that cooled noticeably in September, dragged down by a weakened new orders and declining export demand, according to a private PMI survey. The S&P Global Flash Composite PMI dipped to 52.1 points from August 55.5 points, marking the 12th consecutive month of growth, but at a slower pace. Both services and manufacturing sectors saw softening. Services activity fell to 52.0 points, manufacturing to 51.6 as output growth moderated. All right, that's it on global space. There you have it, decision day. We're all looking forward to what's going to happen today. The MPC rates decision. This one seems very important, at this point, and we're going to be covering that right here on Business Incorporated live. So you don't want to miss that. 1:30. From 1:30 p.m.
So whenever the decision is made.
Exactly.
And of course, we have in-studio analysis.
Yeah.
Ladi, yours truly will be here.
I'll be here.
I think I have a segment there too.
Exactly, yeah.
Okay, all right.
We'll be here, yeah.
All right, thank you so much, Ladi. Well, just before we go, let's tell you at the beginning of the program, we told you how the market closed yesterday. At this time, we see the market has opened, but is in the red. That's the Nigeria market. Stock market is down 0.04%. Unfortunately, it does look like my magic hasn't worked so far. I have to go back and do a bigger magic and see if we can change that color to green before the market closes, or even by midday. But at this time, it's down, lost about 58 basis points, but it's now at 141,439.67. That's what's trading at the market. It might also be an opportunity, for an investor to jump on and get one of those stocks with reduced price. And it might be for your own good. But that's it on Business Morning. Thank you so much for being a part of it. And 1:30, I'll be here with Ladi for Business Incorporated Special, because we're going to be capturing the decision announcement of the MPC meeting, which started yesterday. I will see if those projections are working. Is it a 25 basis point cut? Is it a 50 basis point cut? Or is it another hold? That will be sorted out by 1:30 here on Business Incorporated. So please do join us by then. I'm John Mekwa. See you then.